Holy liquidation cascade. Crypto fam. What happens when a macro shock obliterates $442 million in leveraged positions, yet Ethereum barely flinches? Today on Crypto Pulse, we're diving into how a surprise inflation spike just triggered crypto's biggest flush in months while institutional money showed what real diamond hands look like. What's up, Moonward Squad? Alex here with your twice daily Crypto Pulse, bringing you the intelligence that keeps you ahead of the crowd. If you're just joining us, you picked the perfect day because we're witnessing something extraordinary in the markets. A textbook case of what happens when institutional capital meets macro volatility. Let's start with the bombshell that just hit markets. July's producer price index shocked everyone by surging to 3.3%, way above the 2.8% economists expected. The impact? Absolute carnage. $442 million in leveraged positions obliterated within a single hour, the largest liquidation event we've seen in months. What's fascinating is WOHO got liquidated. This wasn't institutional money getting flushed. This was overwhelmingly leveraged retail traders. Yet despite this bloodbath, Bitcoin is only down 1.82% to 291 after briefly touching that magical 124K all-time high. But here's where things get really interesting. While everything around it was getting demolished, Ethereum is showing incredible strength at $4,287. That's just 4% below its all-time high of $4,878. Now you might be wondering, how is this possible during such a massive liquidation event? The answer: institutional capital is creating a floor that simply didn't exist in previous cycles. BlackRock and friends just poured an astonishing $720 million into Ethereum ETFs in a single day. That's the second largest daily inflow ever, with BlackRock alone responsible for $501 million. What we're witnessing is nothing less than crypto's evolution from a retail-dominated casino to an institutional-grade asset class. Look at these sector performances. Buybacks up 13.55%, L1 blockchain surging 20.77%, real-world assets gaining 9.12%. These aren't meme coin pumps. These are serious institutional capital flows into infrastructure and utility. Meanwhile, Bitcoin dominance is actually declining 0.5% daily, while Ethereum's dominance is increasing 0.2%. And don't even get me started on the funding rates: BTC at plus 1.11% and Ether at 1.05%. The market remains incredibly bullish despite the volatility. So what does this all mean for your strategy? First, we're seeing undeniable proof that institutional capital creates stability during chaos. When BlackRock buys more ETH in one day than gets liquidated in the entire market, that changes everything about how these assets behave during stress tests. Second, Ethereum's resilience, just 4% below all-time high during a $442 million liquidation cascade, validates the institutional thesis. This is not the same market we saw in 2021. Third, the divergence between retail liquidations and institutional accumulation shows crypto has graduated from pure speculation to strategic infrastructure investment. So I want to hear from you. Do you think Ethereum will break its all-time high in the next week as institutional money continues flowing in? Or will the PPI shock eventually bring more selling pressure? Drop your predictions in the comments. If you're navigating these volatile waters, here's your Crypto Pulse game plan. Monitor ETH's ability to reclaim 4,750 as record institutional flows meet reduced selling pressure. Track Bitcoin's defense of that critical 118K support level. Watch for additional institutional accumulation during any further volatility. Remember, sometimes the strongest rallies emerge from maximum pain, and today's liquidation cascade may have cleared the path for the final leg higher. That's your Crypto Pulse for now. I'll be back in 12 hours with another update as these markets continue to evolve. If this kind of analysis helps you stay ahead of the crowd, make sure you're subscribed and hit that notification bell. This is Alex with Moonward Capital, helping you navigate crypto's volatility with confidence. See you in the next Pulse.